Using Gustavo's example, what would be a better way when shopping for a mortgage since the low interest is moot? Here's what you want to do. Don't ask the person that is selling you the mortgage, what is the best way to pay back a mortgage? Okay. I'm not a farmer, but if I were a farmer and I was trying to build a chicken coop, I certainly would not want to get information from the fox on how to build a chicken coop. Are you hearing me? Okay. So here's what I'm talking about, folks. The interest rate is not all of that important. So whether it's 1 point or 2 points or 3 points, we think that when we get that lowest interest rate, is the best thing we can possibly do. What you want to do is get with an interest cancellation expert. Then by doing that, you can figure out what's the best interest rate for you and your family to get, rather than the lowest interest rate. Stay out of the highest, stay out of the lowest, find the right one that's going to put you in the best position to pay the loan off with a much lower interest cost. And there is no one interest rate. There is no one rule of thumb that's going to work across the board for everyone. Here is the key to all of this. There is no magic in any of this. It's all math. I'm telling you, folks, that would be my next new statement. It's math, not magic. That's what we're doing here. Everything is about math, not magic. Once you do the math, you can figure out what's going to be best for you and your family or your business or your church. It's all different. Find out how the math works for you and then apply that, because any decision that you make, you can apply math to it to find out empirical data, real live numbers that are going to tell you this is going to be the best way for me to go. And you'll be able to see it because you're going to be able to answer this one question that most people never answer when they're getting a loan. Here it is. How much is this thing going to cost me overall? What? Is it coming down to that? Listen, if you're buying steak, you're going to ask that question. If you're buying a car, you're going to ask that question. If you're buying grapes at the grocery store, you're going to ask that question. These grapes are so many dollars per pound. Well, if I get 5 pounds, how much is that going to cost me overall? If I get a mortgage at 5% or 3% or 2%, how much is it going to cost me overall? And here's the thing, folks, all the costs you're going to get on all of these loans are going to be structured over 30 years. Remember, every number you're going to hear is based on 30 years. And if you heard us at the top of the show, we asked the question. I just came back from New York. I saw a Lamborghini for the first time. You can get a $200,000 Lamborghini, but you know what you can't get on it? You can't get a 30-year mortgage on a $200,000 Lamborghini. You can get a 30-year mortgage on a $200,000 house. So let me ask you.
Wait a minute, Kenyatta might be able to get you that. She's a jack of all trades when it comes to these loans now. Don't say that, because she might be able to hook you up. So now you got Queen Kenyatta, you just might be able to do that.
Come on now.
I'm actually over here thinking, like, why do that? Why pay for it at all? Because I know people that are living the life by letting other people pay even the car note. And if you need to tap in with me to ask me how, I would love to show you.
Valley, you were saying something?
Yeah, that's a whole nother method you don't came up with. The M&M method. It's the math, not magic. That's the M&M method. Where you want
the M&M
I'm
method.
telling you, the Queen, I mean, we just need to tap in her brain.
Oh, listen, folks, I just love all of you. I mean, you're just tapping in here at the right time with the right information. Folks, listen, you don't want to be caught up in an industry that when you start to ask good questions, it doesn't pan out. Why are we doing it this way? I can get a $200,000 mortgage for 30 years on a house, but no one, practically no one, maybe Kenyatta can, but nobody's going to give me 30 years to pay off a Lamborghini. Not happening. Are you hearing me? So if you have to pay off your Lamborghini in 6 or 7 years, why not pay off your house in the same way? Why can't we look at your house like we do a car? That's what we're talking about, folks. So when you're trying to get your mortgage, you want an interest rate that's going to make sense, that will help you to pay it off in 7 years, not 30. All the numbers, everything that the bank is quoting you is over a 30-year period. But it doesn't matter because we're going to help you to do it in an average of 7 to 9. I hope that is helpful.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.